Welcome to Markets Now. I'm Michelle Roque with Brad Kooima with Kooima Varilek, and we're seeing a lot of green on the board in both the grain and livestock futures this morning. And Brad, thanks for being with me. And let's talk a little bit about cattle first, as we normally do. Last week's cash trade, very stellar, and we pushed into some new highs for the move here in the futures. Can we keep going?
Well, it feels to me like we're going to, Michelle. Thanks for having me on, by the way. The cash question, I think, is a great place to start, at least when you're talking about boring old fundamentalists like I am. Let's back up just a little bit. You remember 2-3 weeks ago, all of a sudden you had a packer that was willing to seem like to scoop, take on, accumulate, that's maybe the best word, inventory, when we had the cash market down at that 180 to 181 slot, and they bought a lot of them. Okay, then we needed a little bit of time there for them to work through that inventory. And now we got what we had last week, which was a market that was at least a couple higher in the south and probably 2 to 3 higher here in my backyard. With the trade, interestingly enough, that was like the week prior, where we were still trading cattle at 6:30 yet on Friday night to one of the majors. And some of those cattle went in Saturday. So it appears that maybe some of these packers kind of overplayed their hand a little bit, tried a little too hard to try to keep that market down there at that low 80s. And now it's like that big beach ball, right, that you try to hold underwater until finally you can't, and then there we pop here again. I think cash has a real shot at being higher again this week. The supply of cattle here in the north, we continue to be very current. In fact, 2014 like current in my backyard. Now, there's cattle other places, and they're not as current in other places. We'll probably talk about that later on in your program about the weight issue. But it seems to me like now you got a little confidence on the part of the feedlot manager as well that he may be dare to hold for a little better prices as well.
All right. Last week on the futures, you and I talked about December live cattle. We needed to get above 179.50 to turn this market and get above the downtrend line. We did that. Where's the next technical objective that you're watching to get the funds to keep piling in here?
It's a great question, because the funds are, after all, a big part of how our market acts, right? And how it works anymore. So believe it or not, I'm told that some of these, I think you've had some fun buying the last couple of days already to a small degree, but I'm told that for some of these big trend following long-term funds, that a close above 183.50, which is close to or very close to where the 200-day moving average is, that's what will trigger a round of buying. That's December cattle above 183.50. We're nicely above it right now, 184.22 last, up 100 points here. We can hold this thing today. You'll probably see some fun buying as we near the close. Now, I've been through a few of these Mondays when they're $1 higher at this time of the day, and then by 1 o'clock you're like, oh shucks, only 20 higher. So let's see if we're good enough. I think the market's good enough, though. Right now the challenge would be as overbought as we are. This market, we're $10 off the lows here, and not very much time. So, and I love it, but we are a little overbought. Maybe we have to pause a little bit for the cause, but very, very good technical action. Wow.
Not only that, but we've had the stock market pushing us, and we should also talk about the fact that cattle on feed report was largely neutral in your estimation.
I thought so. I was I was trying to overthink the USDA. I thought, well, maybe, with Texas and Kansas seemed like they got all this weight around them. I thought, well, you have to have an empty pen. Maybe our placements would be a little less. They weren't. They were basically on the guesses. Generally speaking, I didn't see anything that jumped out on the report, other than we continue to see this trend, maybe not quite as marked this month, but to see this trend where you've got on feed in Iowa at 102%, on feed in Nebraska at 102%, versus Kansas at 95% of a year ago. Texas is at 100% of a year ago. Similar placement pattern too, where the little bigger placements again were in Nebraska and Iowa. So you're seeing these cattle move back to the north. I like the fact that the cattle are moving back to the north, where we do a lot more price discovery here, and maybe moving away from some of the bigger corporate type yards in Texas and Kansas. But the one thing on that report that maybe I'll bring up, because I was asked about it this morning, the Iowa marketings were only 84%. I looked at it and I thought, how can that be? Because pretty subjective here of me to say this, but I don't hear any stories of these big cattle backed up. I guess my comment to that would be, you can't market what's not there. I've been saying for months to you and others that the supply of cattle in the north just does not feel burdensome at all. So I guess that's my explanation there. But no, for the most part, a neutral report, we'll take it. At least it isn't something that changes the trend. Now, remember a year ago, the next two reports were lousy. Big placements that basically never showed up, but then big placements that really, really hurt us. So these next 2 months should be interesting.
Yeah. And you mentioned the north and the placements being down in Iowa and whatnot. You guys are very current in the north. We are not as current in the south. And talk about the weights, because that continues to be kind of the nemesis of this market, doesn't it?
It's the gorilla in the room. You're 100% right. And you can't ignore it. I can't just discount it either. So Tuesdays, by region, the comprehensive weights come out, and so I watch stuff like that. The deal here is the fact that you've got Texas and Kansas have unusually much above the 5-year average weights. Now Iowa is actually fairly average. Nebraska also. So it appears to me that don't forget Texas and Kansas are largely more the corporate feeder that has a relationship with a packer, and it would seem to me that a couple of things are in play here. I think, first of all, the packer, if he can influence the supply at all, is trying to figure out a way to create supply. Well, you can't just clone cattle, right? I mean, and make them appear in a feed yard, but you can make them bigger. So when you look at those beef production numbers, given the fact that we're killing so much less than a year ago and still have beef production numbers not very much less, that's why, okay, because the it's weight times numbers. So that's part of it. I think some of it down there, when I talk down there, they say, well, these feeder cattle have been so high that we just decided to feed them a little longer. I don't know. I get that sort of, but I think my first reason is probably a better reason. So, and some of these places where these feeder cattle have gotten high, they've overbuilt the feed yard. So some of these people are going to have to go without for a minute, but I'd love to see those weights come down. I just don't know. I don't know. I don't see what's going to change that for a minute, unfortunately. Weather, but it's September. Pretty hard to root for a snowstorm just now. It's going to get particularly concerning to me, Michelle, if we get into the yearling run. Okay, a lot of these yearlings have high break evens. I know I've got some like above 190, a ways above 190. If we get into that, say it's January and you're starting on the yearlings, and we're way below our break evens, and we've got cheaper feed, that is a recipe for a big problem. So let's stay current. Let's stay engaged with that whole issue. That's what happened in 15. We lost our leverage because we overfed cattle. So let's see if we can avoid that. But it certainly is going to be on our radar. It better be on everyone's.
Absolutely. So the hog market, we keep grinding into some new highs for the move here as well, defying all odds. But, how much farther do you think we can push that market? And is this all technically driven?
I think an awful lot of it is technically driven, in my opinion. Demand here domestically is pretty average. We continue to have decent exports, which may or may not be a long-term deal. I don't know. I'm going to go with, I think it is mostly technical. So let's go with a technical objective, which, if you all remember, when the December hogs broke out of that big sideways pattern, when we took out basically 175, 75 to 176, that level, we collapsed and never looked back. So I always think that the market has a tendency to sometimes go back to those big breakout important areas. Keep that circled on your chart. So I if we can get back in that 175 and a half to 176 slot, I would expect some selling. And after as big a move as this one's had, I mean, this market started below 162. If I was a hedger, I'd be kind of dialed into wondering, maybe with all this supply of hogs coming at us between now and the end of the year, of taking advantage of this rally.
Gotcha. And the grains were to the plus side there. It looks like a double-digit gains led by the soybean market. China lowered their interest rates. Is that what this is about? Or is this about demand or South American weather or what?
When you least expect it. Isn't that the truth? I mean, it depends on where your listener or whatever your viewer here is sitting. Sitting in an area like I am, which is in Northwest Iowa, we've got a monster crop. And, everybody's going like, wow, I can't imagine we can even think about being higher. But, remember to maintain some perspective. That's a big corn belt. So I think consistently good demand. and prices has contributed to that, and perhaps politics. Let's be honest. Um, Another bean sale again this morning. I think your mention of what's going on economically over there is significant, absolutely. But one of the maybe the tip offs here was 2 weeks ago when we had that bearish corn number, and the market didn't break.
Right.
I think the market is moving away from, okay, we know we've got a big crop, but what's this demand look like at these prices, and what can we do from here now? These are pretty big deals. Watch this 1040 area in the November beans. Big deal. That gap at 1045, the whole world knows where it is. See what it does there. So I think that's a big deal. And if you could somehow get December corn on top of 425, that'd be another deal. Right now, I'd probably rather sell those rallies. We got all of the harvest here to come ahead of us here yet, and I think you're going to find out that that's a pretty big harvest. So I'm more inclined to take a shot at selling into this rally and hoping I'm wrong.
Yeah, that was what I was going to ask you. If you get above those levels, do you run, or do you get so much selling pressure that you can't close above those levels on any given day?
Especially with the calendar the way it is, I think you're gonna get some help here with harvest pressure and all the rest, and softer basis as we go through that harvest. But it's one of those times where I hope I'm wrong for the producer's sake.
Gotcha. Thanks so much, Brad Kooima with Kooima Varilek, and that's Markets Now.